The broadcast is now starting. All attendees are in listen-only mode.
Hello and welcome to GCV Analytics webinar. Today we're going to talk about the telecom sector, and as a guest speaker we're delighted to have Charles Szrom, investment manager from Verizon Ventures. Charles is also a certified financial analyst. Before joining Verizon, he previously worked as a senior equity analyst at Rockefeller and Co. And his academic background is very interestingly in political science and languages. He studied issues of political revolution and even modern-day terrorism. So he brings in a very unique perspective into the venturing community, and we are truly delighted to have him here. So welcome, Charles.
Thank you so much for inviting me, and happy to speak on this topic. Looking forward to digging in some of the data you discovered here. So, we're always happy to participate in GCV events and been very supportive of the community over the years, so hopefully can add some insight from our perspective in what's a very dynamic and changing sector right now.
Absolutely. Looking forward to all this. But before we dig into the sector, I'm just going to give the word to our founder and editor-in-chief, Jim, about a few introductory remarks and an overview of what's happened in the corporate venturing scene over the past year. Jim.
Great. Well, thanks very much, Kellyanne, and let me add my thanks to you, Charles, for being able to join us. We're really looking forward to your sort of insights. Verizon's obviously been one of the real giants in the industry, and so both in the corporate venture industry and the telecom industry. But a little bit about us. Obviously, GCV Analytics, runs the analysis on the data side that comes out of the corporate venturing trade paper that we run, Global Corporate Venturing. If you think about what GCV as a publication is trying to do, it's really trying to answer two questions. Who does corporate venturing and what do they do? And who does it? It means that there's more than 2,000 or so corporate venturing units around the world that we track, and what are they doing? It's we'll come to that in a little while in terms of the amount of data, but that all those deals goes into the database and allows us to hopefully draw some analysis and conclusions about who's working with whom in what areas and what some of the disruptive factors are starting to come through. But Global Corporate Venturing is just one of our publications. We also have Global University Venturing and Global Government Venturing, which are effectively trying to do the same job for those communities. And out of that, we have the GCV Academy, which is the training and allows the next generation of community leaders and industry leaders to be developed and trained, all the way through the internship and mentorship, up through the rising stars and into the power list and of the leaders. And then they're all part of what we call the GCV Leadership Society, which is effectively the top 20% or so of the industry are responsible for about 80% of the deals. Those are the ones which have developed a long-term track record, have the established teams, and are really driving the industry to more and greater heights. And again, that will come through very clearly in some of the data we show today. So thanks, Kellyanne. Next slide. A little bit about what we do more broadly. Obviously, the sort of trade paper and data is just part of it. The real insights come when the industry gets together amongst their peers, and we do a number of conferences. The one we held last week was in Hong Kong to connect the Greater Bay region in China, the Shenzhen, Macau and Hong Kong region, into the rest of Asia Pacific, and more broadly allowing the rest of the world to come to that. So delighted that went so well. We were fortunate with our timing. The typhoon hit just before the event, obviously a terrible tragedy in many ways, but the timing meant at least many people could get there. And our other events coming up include one next week in Sao Paulo in Brazil with the government there. We're then in New York for the Synergize conference at the beginning of November, down to Houston the week after for the Venture Houston event, across to Finland the following month in December, and in January we end up with our biggest conference, the GCVI Summit, which had this year about 700 billion 700 people representing corporations with about $6 trillion in aggregate annual revenue and about 200 billion of venture assets under management. So it was a great gathering, a great community, and early indications are we should do even more for next year in terms of number of attendees and seniority. So, Kellyanne, next slide. So obviously, if you want to know more about GCV Analytics, which we've been developing in partnership with Cubics Analytics, you can go to gcvanalytics.com, and in general, just contact us at info@globalcorporateventuring.com for more information. But that's the slight context about who we are and where we're able to get our data from. But as we look ahead into the first 3 quarters of 2018, it's been quite interesting as we look at the overall deal sort of totals and what's been happening. And actually, if you look at the first half of the year in total, it's been a record year in terms of both the number of corporate-backed deals, more than 1,300, and the value of those deals at 85 billion. So although the number of deals is up by sort of 10-15% or so by volume, by value we're starting to see much bigger traction, up by nearly effectively a third in that sort of light. Next slide. And those strong 2 quarters has seen a number of of sectors being represented, of which telcos, actually interestingly enough, as a target area, haven't been highly focused on, but actually what we've seen is a number of the telcos, and we'll come to that more generally, is the telcos actually looking into other areas for their deal flow. Next slide. To give you some context about where the corporate venturing community fits in and how it's starting to really drive the overall venture ecosystem, if you look at PitchBook data, we partner with PitchBook in terms of the US, has seen an increase by deal value in terms of the first half of the year compared to prior years. But the number of those deals has actually started to fall. So again, just as we saw the corporate venturing community starting to do more deals, and that the value of those deals have been increasing, that's starting to show through into the overall numbers that the venture capital ecosystem, particularly in the US, has seen in terms of the value spike of the deals we see. Next slide. And I think this year, what's early indications for the Q3 numbers, this is as of Monday, so not quite the end of the month and end of the quarter, is actually already that this year the value of the deals done by corporations has been bigger than the whole of last year, which itself was a record. And looks like if the Q4 numbers in terms of the volume of deals continues to hold pace, will actually surpass last year's by both the volume of deals and probably much more spectacularly by the value of those deals. So these trends that we started to see over the past few years driving the overall venture industry is really clearly coming to the fore. Next slide.
If I could cut in here, just quickly, I'm curious on your all research here, but obviously it looks like there's sort of a move from less of a focus on seed stage to growth, mid and growth stage kind of investments, just reflected by sort of the average value per deal here. What research are you all seeing on that's influencing, that trend outside of, obviously we have our own views at Verizon Ventures, but curious if you all have views there too.
Yeah, great question, Charles. So, yeah, I mean, I think, Kellyanne chime in as well, but certainly at the top down, what we're seeing is quite interesting is by the volume of deals, corporates are actually really increasingly active at a very early stage. So they're starting, as a number of VCs move out of the early stages, corporates are actually trying to fill that gap, particularly in some of the more difficult sectors for VCs to really clearly see how they can make a great win in a short space of time. Corporations are actually stepping in at an earlier stage, and so the value of those deals isn't great, particularly at that early stage. But obviously the majority of deals that they're doing are at that sub 10 million scale. And so I think that's quite interesting. But what's really driving the figures is, it's really clearly shown in the data is the sort of the large, really large value deals, the 1 billion plus rounds are really almost always involve a corporate. We'll see that, Kalyan, through the data next. But so I think what you're starting to see is a sort of almost like a barbell that corporations are really driving ones where they can say, hey, we can really see some strategic and financial wins here, so we need to be pushing these portfolio companies to have more money. Think of SoftBank as
I would second that. Just from our view, it's with the sort of growth in corporate venture probably starting most robustly sort of 5, 6, 7, 8 years ago. A lot of folks sort of began in sort of the mid stages, right? A, B, C kind of rounds. And it seems that folks are now sort of pushing out to fill out, if there's sort of a bell curve with a lump in the middle, now we're sort of seeing more activity on either ends of those tails of the graph. As on the seed stage, folks looking to get more sort of early stage innovation, see what's sort of down the pipe 5, 10 years from now, and sort of more frontier investments, or looking to make sort of a more immediate sort of business financial impact by investing in those growth rounds. So I think that's tracks with what we're seeing on our side as well.
Oh, right. So Verizon is doing that as well. From your perspective, you're seeing that sort of slight shape. I mean, you're slightly different. You've got a much longer term track record than probably a number of the groups that, like you say, started 3 to 5 years ago. But is that being reflected in your own portfolio too?
But certainly, I think historically, we still continue to be sort of focused on sort of A to B type rounds. But definitely seeing interest on both the seed side and obviously seeing deal flow across all of that. I'll just say, as a player in the industry, that's sort of what we're seeing is more increased activity on sort of seed and growth side. But obviously, sort of from a pure dollar perspective, it reflects what you're seeing here. Is if you do the math overall, it adds up to a larger amount per deal overall. Just because probably, and I'm guessing, I think this is kind of what you're saying, is the amount of those sort of mid-size series A, B type deals, it doesn't keep up as much as relative to those really large rounds that end up driving the math on this slide.
Okay, that's great to hear. Thanks. Yeah, actually, it was one of the interesting things I mentioned our sort of Houston conference, but we found a number of the corporate partners that we wanted with were, as you say, saying, hey, what are we going to have as a pipeline over 10, 15 years? How do we engage with the academic and some of the startups and spin outs coming out of that? Can we really engage with them at a much earlier stage? And probably historically corporations have been engaged with, they might sponsor a research project and the rest, but they're actually looking at the startups coming out of university. So Houston is where we're bringing together the sort of top 200 or so universities, from Tsinghua through to Oxford and Monash and Australian National University, through to the main US ones from Texas and Stanford and University of California and the rest. So, because of that reason, the universities are saying, hey, we think there's an interest here, and the corporates are really focusing on that. But it's interesting. But anyway, I don't want to spend too much time on that. From my perspective, we might have some further questions on it at the end. We can come back to it. But Kalyan, do you want to pick up on the telco sector deals itself?
Sure, absolutely. So on the telecom sector in particular, before I dive in deeper into it, I just want to point out that at GCV Analytics, we understand as telecoms, any sort of startups or other companies that have to do with wireless technologies. Obviously, we include telecom service carriers and providers and other purely telecom-related businesses and applications, including software and hardware. So much on just the pure definition side of it. In terms of general trends in the sector, the telecoms is arguably one of the most disrupted sectors in terms of its core services. If we really think about things like voice and text services, outside of the workplace, probably very few of us ever make a phone call nowadays. Or if we do FaceTime, Skype, and so on and so forth. For text, we use I don't know, if you're in Europe like me, you probably use WhatsApp. If you're in Japan, Line. If you're in if you're in China, most likely WeChat, and so on and so forth. So there's been a great deal of disruption, and this is obviously a very technology-driven sector that's also very regulated, and it is very competitive in terms of the significant capital outlays that are required in order to stay in business, such as the rollout of the 5G mobile networks that's expected to take place within the next 2 years. So those are enormous capex in infrastructure, and all these factors keep profit margins pretty tight. So, in this sort of competitive industry, in this sort of competitive environment, obviously, a lot of the revenue growth opportunities lie in some sort of partnerships with the over-the-top disruptors, or in even in cross-industry partnerships and diversification. And one of the good examples we could give for that is Canada-based telecoms carrier TELUS, which has actually gone into healthcare, and it has become one of the largest health technology vendors in Canada. So much so that its corporate venturing unit, TELUS Ventures, is actually quite active in the healthcare and life sciences sector. But of course, this is just one example. There are other examples. From the industry, which even Charles may want to touch on if he likes. Charles.
Yeah, certainly. I think there's a lot of, speaking for Verizon, in terms of, activities where we've been more, places where we've been more active in markets we're looking at. I think, obviously you mentioned 5G is sort of a very prominent focus and next generation of connectivity, and we've made a number of announcements around sort of fixed wireless access in that space. But even beyond that, which is obviously sort of the core focus, we're obviously looking at sort of use cases that new, faster, lower latency, higher throughput, higher, more reliable connectivity can enable. So, obviously we've looked at all of these spaces, including healthcare. I think we've been particularly active, in the last few years. If you look at some of the acquisitions we've made on mobility and fleet management, obviously as transportation becomes a bigger piece of that story, we're very excited about that space. And I think, it's sort of like if you go back to, what Mark Andreessen famously said about sort of software eating the world, right? Well, software these days no longer sits on-prem in one device. It sits obviously cloud and is becoming distributed across a number of formats and areas of compute. So if software is eating the world, connectivity is sort of becoming the delivery vehicle for that consumption, right? And so we're starting to see connectivity go in and enable all these spaces because they're becoming so software enabled, and because software relies upon connectivity with broader data sets, consumers, and other areas of business. So that's why I think you're starting to see, sort of from an industry perspective, you mentioned before, telecoms and others looking at all these adjacent areas, because you're starting to say, well, we're providing this connectivity, there's an added ability to provide even more value on top of that as the market evolves, as the tech stack evolves.
Yeah, definitely. The telecom sector is the connecting tissue, as it were, of an increasingly digitized world. So on to other general trends in the sector. As we mentioned already, fifth generation mobile networks that are awaited by 2020 in developed and mature markets on the list. So along with them will come other growth opportunities. A lot of market reports suggest new service subscriptions will rise per household or even per individual as we're expecting. As we're expecting things like connected vehicles, smart homes, automated workplaces, anything from the Internet of Things realm to really gain momentum. Some of the challenges that the industry may have to overcome are associated with educating consumers about things like security in IoT applications. I mean, even to this day, it's a little striking that with things like, for example, mobile payments. A lot of consumers believe they're really not secure, when in fact mobile payments are even arguably by some measures much more secure than regular offline payments. So there's always the challenge of educating consumers. Now, obviously, other possible synergies for telecoms are with augmented reality and things like broadcasting and streaming. Actually, with augmented reality, we have an example of that with one of your competitors, AT&T. They struck a strategic partnership with Magic Leap, which is an AR headset developer with a superimposing images on real fixtures. So in addition to that, obviously a lot of technologies that are tangentially related, anything from image and speech recognition through machine learning and data analysis that's really useful to operations of telecoms, to obviously high-speed in-flight internet access, have already been of great interest on part of telecoms corporate investors, and we expect to continue see them being interesting areas for you guys. Lastly, on the general trends overview, I'm going to touch on the political and regulatory
I would just point out on the last
Go ahead.
last bit, you mentioned AI. If you can scroll back to the last slide.
Yep.
At the end of it, you talk about image speech recognition. I think there's the advancements. Personally, spend a lot of time on AI, and the advancements in computer vision and natural language processing are going to increase the need for more connectivity, both even when you don't need connectivity, right? If that makes sense. So if you have edge compute, which we're very excited about, you're going to have a lot of opportunity to input more data at the edge, which will then increase the need to transfer that data back to a central hub at some point, which makes edge compute all the more valuable. So we're really excited about that, and particularly the technical advances in AI and NLP. And then, as like any enterprise, but particularly one that has so much internal data, the amount we can learn from next generation deep learning is really incredible there. So we have a company in our portfolio called Spark Ignition that does a lot of great work on edge analytics for IoT deployments, looking at anomaly detection as well as security. And so things like that, where we're excited about enhancing the value of the edge so that we can then serve the edge better as the overall corporate are interesting. But I'd also hit on the sort of security point that was mentioned before, and something that's not here as much and which is a subcomponent of that is blockchain. And there's been a lot of sort of hype, where one of the most hyped sectors over the last couple of years is blockchain. But we think there's a lot of applications on the security side, particularly as you ingest data at the edge. We have a portfolio company, Filament, that's working to do a lot of interesting work in this space by basically securing the point of data ingestion at the edge up to a variety of blockchains based on what your needs are in the cloud. So we think that's going to be a sort of underrated area, but blockchain is a use for edge security, edge data trust is going to be one that's going to be particularly interesting going forward.
I see. Very, very interesting. And now to the not so interesting political and regulatory side. Actually, political and regulatory developments have varied across geographies for telecom players. So in the U.S., there have definitely been favorable ones, such as the tax reduction for U.S. businesses by the Trump administration. and also rescinding the net neutrality mandate by the former Obama administration, which is definitely a positive development for telecoms. And just to make sure that if we have viewers or listeners that are outside of the U.S. and are not familiar with what net neutrality is, the net neutrality rule basically stipulated that a telecom carrier could not charge you at a different rate for a specific internet service. So, say if you want to stream content on Netflix on your daily commute, they cannot charge you a higher price for streaming Netflix. So it used to be that way. Now this has been rescinded, and this is obviously favorable for U.S. telecoms, particularly if they decide to partner with OTTs. And on the other side of the pond, the developments haven't been that favorable, with the removing of the roaming charges within the European Union, currently with 28 countries. So that's obviously gonna further tighten profit margins and may create some issues for the rollout of 5G networks in terms of purely in terms of margins and accounting, so to speak. But we'll see what happens and how your European peers adapt to that. Now, on to the corporate venturing side of things. We tracked 208 deals involving corporate investors from the telecom sector around the world. A huge number of them, 97 in the US, 16 in China, 13 in India, 10 in Japan. As we already mentioned, the pure telecom startups and their deals are kind of few and far between. So it's not really surprising that telecoms have invested in a variety of other sectors, mostly in IT startups, in media startups because of potential partnerships and synergies, and in most recent times in transport with the rise of connected vehicles and the opportunities that might entail. If we look at some of the co-investments between telecom corporate ventures, we see a very huge variety of startups they have co-invested in. I mean, we see things like smart antenna developer Alcon Systems, telecom startup Matrix. We see cybersecurity companies like Knock Knock Labs and Morphisec. We see media companies like Fastly. We see AI like Fusion, augmented reality like EdgyBees, e-commerce enterprises like Shopback and Caro, between SoftBank and Singtel, and even drones like Precision Hawk. So quite a variety of interests in terms of the investment thesis of these sort of investors from the telecom sector. So their investments.
And on the drones, we've been Precision Hawk's a good example there, but the space is, from a telecom perspective, I think one of the reasons we're very excited about it is as the regulatory space continues to develop and as beyond visual line of sight becomes more technologically and most importantly regulatorily accepted, there's going to be a lot of need for LTE connectivity in that space. And you already see the huge number of applications, the large number of drones that are sold every month, the applications across areas of normal business or real estate, site survey, for both telcos and utilities and industrial manufacturers. So that's one of the that's reason we're very excited there. So we're even more excited as the space starts to develop from a regulatory perspective.
I see. Would you like to comment on the other two investments that we see on this chart, EGBs and Lumina Networks. If there's anything
obviously,
you want to add in.
SGB is very. Yeah, again, I would say, from the AR perspective, very exciting from the, perspective of being able to offer, and the SGB does have a bit of a drone angle as well, the ability to provide live, video and guidance on demand to real use cases, first responders, things of that nature, is particularly interesting, because we're going to start to see, the ability to do that on a broader scale with next generation connectivity. And Lumina, obviously another, sort of player in the software definition of our overall network. So excited to continue the softwareization, virtualization, quoting Andreessen again, of our networks. Lumina is a good example. Another example is Versa Networks. So, we're excited to continue to see that happen, because as you said, I think you mentioned before, there's a lot of capital deployed in this space, but there's a lot of tools that we can leverage these days that allow us to get greater return from that capital by virtualizing the networks, just as we've started to see broader corporate networks, broader other software systems become virtualized, less reliance on hardware, more reliance on virtualization. So Lumina, a piece of that story, and EGB is a piece of the AR story.
I see. So with this wide spectrum of investment interests in mind, if we look at how these investments of telecoms corporates have evolved, particularly in recent times, we see that on an annual basis there was an increase from 2016 to 2017. In terms of deal count, 185 deals in 2016, up to 200 last year. But even more importantly, on the dollar side, and just want to make sure that everyone understands that these dollars are total amounts of dollars deployed in the rounds. They are not dollars invested solely by the corporates. But a significant increase that we see there, from just north of 13 billion in 2016 to almost 34.5 billion in 2017, and it seems like 2018 might well be on the same sort of path here. Of course, that will remain to be seen by the end of the year. This is data that covers only up until the end of August, by the way. So just so that there is not any confusion among people watching this. The top investors over the past year from the telecoms. Number one in terms of volume was undoubtedly SoftBank, which has several divisions investing in minority stakes, including its kind of gargantuan vision fund. Next after that is Verizon, and we're very happy to have a person from Verizon here. So thanks again, Charles. And then Japan-based NTT Docomo. If we look at top corporate investors from the telecom sector and from other sectors that invest in the few deals in telecom startups, we see SoftBank and Swisscom, so players from the same sector, but also chip manufacturer Qualcomm, as well as other players, as you can see. The top deals that we tracked, I'm just gonna briefly mention the first three that were the most significant, at least in size. The AR developer Magic Leap, that was backed by a host of corporates, among which was reportedly AT&T. In a Series D round where it raised $963 million at a valuation of about $6 billion, and that also came along with a strategic partnership that it struck with AT&T. The other deal was China-based construction platform Katira, which raised 865 million. It was backed by SoftBank's Vision Fund, which actually led the round, and then UB Tech, which is a robotics company, develops humanoid or human-like robots for education and entertainment purposes. Also raised a pretty impressive 820 million Series C round that was backed by Telstra. Australian telecom carrier Telstra, among other corporate investors such as manufacturer Haier and internet company Tencent. I'm not gonna go over the rest of the deals. They're described in detail in the latest issue, so all of you could read more in depth about it there. In addition to deals, we also try to give sufficient coverage of exits that involve corporate investors, whether they involve them as exiting investors or sometimes even as acquirers or cornerstone investors. So we tracked 19 such exits for telecoms between July last year and August this year, and those were 16 acquisitions and 3 IPOs. 13 of them took place in the States, as you can see on this map. If we look at them on an annual basis, 2016 and 2017 were pretty much more or less the same in terms of the deal count. But what's been more impressive is 2018. We already have 9 deals, that were worth an estimated of 21.7 billion, and actually much of that there's two deals in particular, 2 exits that account for much of that number, as you will see on the next slide. There is the Flipkart acquisition by Walmart, which gave a very good exit to SoftBank in its Vision Fund. SoftBank had paid about $2.5 billion for I think it was a 19 or 20% stake in Flipkart, and it ended up selling it for $4 billion in the acquisition process. So that was a pretty significant one right there. Then Xiaomi, the consumer electronics producer based in China, which went public in its IPO, which amounted to $4.7 billion. One of the cornerstone investors was China Mobile, so that was quite significant right there. And we had other corporate investors that exited, such as Qualcomm, IDG, etc. Now, in addition to exits, we also try to track funding initiatives. So by funding initiatives, we understand any sort of new corporate venturing units that are being launched, any sort of regular venturing funds with corporate LPs, corporate-backed incubators, accelerators, and other such initiatives. So what we've seen over the past year and a half is kind of a sharp decrease in both numbers and as well as in dollars, as you can see here. But we have to be careful because the 2016 data was obviously slightly skewed due to the SoftBank Vision Fund, which had raised about 97 billion by the end of 2016, and eventually ended up hitting the targeted 100 billion mark in early 2017. Right now, there are rumors that there's going to be a second Vision Fund. So we're all pretty much staying tuned for that. and we'll see how that develops in the future. Now, within the top funding initiatives of the past 12 months or so, most notably was the Xiaomi India Fund, which was a $1 billion dollar fund, along with Shunwei Capital. It will target manufacturing, entertainment content, fintech, and any other sort of services that are related to its ecosystem. And the brand is having a particularly great success in India because it does seem to provide what a lot of Indian consumers are concerned about. Top-notch technology at a relatively affordable price compared to other brands like Samsung and Apple, of course. So it seems to be a very successful market for that rising Chinese brand. And then, of course, we had the Swisscom Digital Transformation Fund, almost $200 million, and much like with other funds raised and used by and managed by Swisscom, it will target later stage companies from Switzerland, US, Europe, and Israel, the geographies that that firm tends to concentrate on. And this slide actually gives a bit of a visual summary of some of the important and major people's moves, participation in new funds and new venturing units or rebrandings. So obviously we had the in the Nordic region, we see there was the Telia telecom carrier, which started Telia Ventures, and obviously that came along with hiring new people there. Nokia rebranded its Nokia Growth Partners to NGP Capital, and then of course we had firms like Swisscom, Xiaomi, KDDI, NTT Docomo participate in funds. SoftBank did a fair bit of hiring, mostly at its London office for the Vision Fund. Actually, also GCI Communications in the US, Experian in Ireland, and so on. Lastly, in terms of government and university venturing deals in telecom startups, the numbers have been scarce and scanned even more so than on the corporate venturing side. This is deal flow in university spinouts, being telecom spinouts. So they're like really few and far between, and it's much the same for the government-backed deal. Telecom startups. There's just too few deals to be able to draw any sort of meaningful conclusions. Obviously, governments who are interested in growing the digital infrastructure of their countries and their economy will continue to be interested in such startups and such tech developers, and we'll see how that unfolds in the future. So that concludes my part of the presentation. I guess, Jim, back to you, and you could ask Charles some further questions, and then I could contribute with a few.
Perfect. Thanks very much, Colin. That's a really impressive run through. And Charles, thanks again for chiming in and bringing some real insights as we went through some of that data. Obviously, I'll open up to the webinar attendees. Do type in if you have any questions. We'll be able to take those. So while you're sort of typing away, given that we finished, I'll quickly ask Charles. Two real thoughts. If we go back just before the final slide on the corporate venturing side, there have been a number of people move changes, in different parts of the world, and just from your own perspective at Verizon, is there anything about the sort of sector and the disruptive changes or how sort of corporate venturing units are viewing, industry that that could be taken into consideration now? And obviously people change in different walks of life for different reasons, but I'm just wondering how, as a corporate venturing unit, these types of things are perceived across different sectors.
Yeah, you're kind of asking, is there, given all the moves that you're presenting on this slide, is there any sort of broader trend driving that? Is that kind of what you're asking?
Yes, exactly.
Yeah, I'm not, look, obviously, you highlighted sort of the next generation of connectivity, right? So that sort of macro technological trend is certainly driving folks to become interested in the space. Obviously, from a career perspective, obviously one of the reasons I'm at Verizon, I'm sure others are sort of seeing that in other opportunities, right? Opportunities sort of be on the ground floor of investing in this next generation of technology, right? Is a pretty interesting one. So I'd say that's definitely from the sort of technology side, and especially given that, historically, Silicon Valley has not invested in telecom as much as, SaaS and other sort of areas, at least in recent years, right? So the opportunity to do that maybe sometimes greater from a personal perspective at some of these telecom corporate venture units. So there's that sort of macro technological trend. And then from a, putting sort of my former equity analyst hat on, just sort of from a macroeconomic perspective, obviously you sort of have, where we are, so the global economic cycle, labor, it's a tight labor market. So I think that always drives people to move around, right? Just people look for new opportunities at this time in the cycle.
Okay, that's really helpful. And then again, we'll see if there are other questions come in, and then I'll pass over to Kalyan just to add some thoughts. Again, when we started off and Kalyan presented a number of the sort of the big macro questions that were coming through, obviously he sort of gave a good perspective in terms of the importance of edge and the role of that AI is playing. That sort of really is driving a lot there. But on the other side of the equation, we're seeing a lot of demand for the real content, so that it's not just dumb pipes, providing the sort of data to pass across it, but it's actually understanding how people can use the sort of the content and provide almost the analysis. It seemed almost a bit, if I was to infer from what you were talking about the AI, that really some of the big telcos can see there being a role, not just as the carrier, if you see what I mean, of that information, but understanding the content both that consumers might want to see, hence a number of the content plays that we've seen acquisitions on, but also in terms of providing the analysis that other people can then use and come to you for that expertise. Is that a sort of fair inference?
So the question is, if I could rephrase it, sort of the sort of content strategy of the telecom industry more broadly, and sort of how corporate venture is supporting that. And
yeah, exactly. I suppose there's a two-part. There's the content strategy, but also not avoiding being effectively a dumb pipe and trying to provide the analysis, whether through AI, of the data that is passing across that could be useful to other people, not just, so it's the content that consumers can see, the sort of whether from a Sky or Oath or AOL type of play, but also the sort of the AI analysis to mean that there's greater value held by those who see the data crossing their path.
Yeah, I would think first of all, yeah, obviously you mentioned Oath, so obviously that's our big content play in the space, is the combination of Yahoo and AOL. And obviously there's going, as we talk about sort of 5G, I think there's a study I think LinkedIn or someone did with LinkedIn recently showing how much user experience uplift there is when you employ an edge compute infrastructure strategy. So obviously that will have an impact on a lot of these content plays, not just our own, but also those we service. The other sort of question on how does AI play into that, I would think of it mostly, at least initially, sort of rather than analyzing the data itself, but probably think about how you can use AI to have that more responsive network. So the sort of historical content distribution being a little more sort of static, not static, but sort of pre-planned and pre-staged, right? Using AI now and using technologies like software-defined networking and software-defined wide area networking and serverless tools and things like that, we can be much more responsive. So I would think of AI actually in that context, is how can you use AI to recognize that consumer X in this country or this part of your market wants that piece of content and that maybe in a different part of your market, right? I mean, just think about anybody watching Netflix these days, right? You can sort of see, the benefits of, or any OTT streaming offering. You see content from all around the world, right? So, there's going to be an opportunity for folks to sort of pull content from different areas, and you need to connect these disparate consumers of content with sources of content, and AI is a great way to sort of help route those paths in a way that's more dynamic than we did historically.
That's really interesting. Thank you. I mean, that's a great understanding. So thank you. Appreciate that. Kellyanne, any sort of thoughts from yourself on that? Otherwise, I think as we come towards the hour mark, we'll wrap it up so we don't run over.
I'd like to ask Charles about another sector that's going to present and is already presenting quite a few opportunities for telecom carriers, mobility and transport. Would you care to share your thoughts and your comments on trends in that sector? I think that's a very, very relevant one as well.
Certainly, sort of the autonomous and semi-autonomous, their developments. There's going to be a lot there. Obviously, a lot of that content, a lot of that data will still be processed locally, but we definitely think there's going to be some content that's processed at a more global or centralized level. A lot of the autonomous technology will have to rely and operate kind of how we operated historically as human drivers, which you have to process a lot locally using camera vision and things like that. But there's going to be a lot of opportunity, we think, to use connectivity to warn of traffic incidents, warn of the, sort of do proper route planning and everything of that nature. So there's definitely a lot across all of that as well. So, I would say that, sort of more broadly, we're looking at sort of how can we use connectivity to provide the guidance where it is useful and sort of traffic level. But then also, as folks move to sort of more semi-autonomous and autonomous type formats, what sort of infrastructure do we need to support content delivery to those environments?
I see. And my very last question, because I'm just tempted to ask you because of your academic background in political science, and you've studied things like political revolutions. So what are the parallels that you draw between political revolutions and technological revolutions, and what are the differences?
Yeah, thanks for connecting my career, because it's helpful for you to explain it. I have my own view of how it all ties together, but yeah, certainly an unorthodox background. So I'm glad you saw the connectivity there. But certainly, I think the challenge with investing or sort of any sort of scenario planning, be it in a government or a private role, is understanding that how the world looks today is going to look radically different 5 and 10 years from now, and being able to understand when those inflection points occur is really useful, obviously, right? But also extremely difficult, because each time you predict dramatic change, you're more likely than not to be wrong. But the challenge is to get those predictions exactly more right when you have these sort of step changes. What I would say now is sort of connecting sort of political and technology and the sort of step changes in those spaces is just an overall move to much greater distribution and much greater decentralization, right? So we've talked about sort of how all these, physical assets are moving to different places. We've talked, and you need to connect physical assets from a logistic kind of supply chain perspective in many different areas. You need to connect, content data in many different areas. So the technology is becoming increasingly decentralized. If you think about edge compute, if you think about, things like serverless technology and other things in that space where you can do sort of more deployments at the edge and have more, really compute no longer has to be centralized. That's sort of how we're seeing the sort of bottoms up perspective from technology. Everything's becoming a network, and at the same time, you see that in the sort of political realm, right, as well, right? We see folks more broadly organizing using these pieces of technology, but then feeding back into the political systems and becoming, which are also becoming decentralized in their own ways, right? So it's really interesting to see both of those happen at the same time. But I think it's a fair bet, sort of more broadly, that from an investor or sort of planner perspective, to bet on the increasing decentralization and empowerment of individual nodes in the network overall, rather than sort of decentralization. So I think that's the overall trend where you can see across both of those realms. I
see. Thank you so much.
Perfect. Well, at that point, we'll say thank you very much, Charles, and obviously I'll add my thanks, Callahan, for the preparation and analysis. It was really, really inspiring to see the run through. And obviously, if there are any further questions, don't hesitate to reach out to us more broadly. But let me pass over to Callahan to do the final close.
Yeah. So I see there are no questions from the audience. So we're going to proceed to closing it now. Just the one thing that I have to mention at the very end is the slides will be made available to people who had signed up for the webinar and may not have been able to attend, as well as to the attendees that we have with us right now. Thanks for joining us, and also we will make the video recording of this webinar available on our YouTube channel. And that would be available also to subscribers of our magazine and any of our other services. So thank you very much once again. Thank you very much, Charles, for participating in this webinar. Next webinar is going to be probably the third week of October, and we are going to deal with the energy sector. So thank you very much, and have a wonderful day.
Thank you very much.
Yeah.
It was a pleasure.
Thanks.